Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago talking currencies. Let's talk about the euro, which was down 0.75% on its lows at about 116.41 in the December futures contract, getting back up into the high 116s in toward the close, but still finishing down about 38 basis points or just under half of 1%. The Italian deficit, the big culprit. Italy put their budget out to the public yesterday and they set a budget deficit target way too high for the EU, 2.4% of GDP. The EU demands 2% or lower. The Italian bond market sold off by about 5% as the day went on. The Italian equities got hit as well. There'll clearly be more discussion about that between Italy and its EU governing bodies later on in the trading week next week. We also had the EU CPI come out, which put pressure on the currency. The core CPI numbers missed while the headline was mixed. The core month over month missed by 0.1%, and the core year over year fell below 1.9%. So the overall EU inflation numbers seem to be dipping a little bit. Again, the headline numbers actually beat slightly, but the core numbers is what everyone was paying attention to, especially given the pressure on the currency with that news of the Italian budget deficit target being too high. But then the bright spot in there, as always, with the EU, Germany. Germany was very strong. Their unemployment claims rate dropped from 5.2% to 5.1%. It was expected to come out unchanged, so a little bit stronger on the German employment side. That probably contributed a little bit to the slight rally we saw in toward the end of the day in the euro currency futures. This is Bob Iaccino talking euro currency from the CME Group trading floor here in Chicago.